Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about both Amazon and Apple's earnings, as well as a review of stock market performance in July, the best month in market since 2020. Before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Amazon beat earnings yesterday and the stock is up 10% this morning. Is ticker AMZN a buy, seller, hold?
Hey, good morning, Allison. Good morning, everybody. Casual Friday here at Ankerstar Wealth. The best part about Amazon's earnings, is that it boosted confidence across the board there. So when we'll talk about Apple here in a second, but certainly, Amazon is a part of everybody's life, pretty much. Whether you're Amazon Prime or whether you actually watch any of the content, that stuff is out there, or Amazon Web Services. There's so many ways that they have to win. But most people have the deliveries to their door, right? It's just too convenient to when you need something and you don't need it right now. If you need it right now, you got to go to Walmart or Home Depot or whatever. But if you don't need it right now, you just simply log on, find it on Amazon, excuse me, and have it sent to your door. Sometimes in hours, sometimes in a day or two. But what an amazing company. And the scare earlier in the week was that Walmart posted such negative earnings. And they talked about the lower half of their demographic was struggling with inflation, so they're spending less. Amazon really didn't see that. They kind of beat basically across the board. And, as far as their guidance, it's kind of a mentality. Well, if we can, we continue to grow when the economy is shrinking. We just had our, recession signal yesterday with back-to-back quarters of negative GDP growth, but Amazon's still growing. So if they can go through that, they can kind of grow through anything. So once the economy turns, they're just going to even go higher from here. So now whether you want to buy, sell, or hold Amazon, it depends. If it's gone up 10% plus this morning, we'll check the numbers here super quick. But yeah, so holding there at 10% up, it kind of depends. We'll look at the 6-month chart. That's quite a move back, from all-time highs back here in March. Or actually, it might even be, let's go back to, back in November was kind of the all-time highs. But you can see from this chart here, the 1-year chart now, quite a bounce off the bottom. When you look at their PE ratio, it's up at 120. So I mean, you got to kind of want it. It doesn't pay a dividend, but it is kind of a change the world type company. So that's where it really deserves to be in your portfolio. So if you have too much, you might shave a little bit here. But if you don't have any at all, I think Amazon belongs pretty much in everybody's portfolios. So I have no problem buying here at the current level.
Next, Apple also beat earnings last night with the iPhone leading the way. Is Apple still the best company in the world?
Unequivocally, yes, but I'm a little biased on that because I've said that so many times. But really, I think so, and I think the data supports that. Not to go into a whole lot of the details on everything they have that's going on to win, but certainly they do have a moat, if you will, and that's what you see in this headline. So when you think of are they a tech firm? Yes, but they're also a luxury firm. When you look at investing theses, if you will, you want a highly addictive product with high margin with a moat, right? And they certainly have that. There's certain people, you may know some of them, that would rather die than give up their iPhone, so it's the stickiness of the Apple customer is not going to be phased, even in a recession. And you talk about what Walmart said is that the higher end of their demographic, it hasn't really been affected by inflation. They simply just, have a little more disposable income. So therefore, they can kind of live life, it doesn't feel as good as it normally does, but you're paying a little bit more, but they can absorb that at the higher end. Same thing with Apple, folks that have all the Apple suite of products. They're not fazed by this. And certainly, just like with Amazon, when the economy turns, you're going to see even more spending in this space. All right, let's take a look at the Apple chart. Is it a buy, sell, or hold? You can still buy Apple here. Easy. We'll look at the 1-year chart. So it's come down a lot. It was up, 180, bouncing off 180 a couple times. And look at back in March, how fast Apple comes back. So when you look at, when I talk about the snapback and being in the bathtub waiting for the snapback, look at how steep the lines are here for Apple. When it comes back in a hurry. So that's why, you'll hear Kramer say hold Apple and don't trade it. Here's why, is because it comes back so fast that you don't get that warning of, okay, well, the 3-day up pattern, if you've ever heard me talk about that. Well, let's make sure the bottom is in before we buy back in. Well, you're going to miss 5-10% and while you wait for those 3 days. So that's why you really need to have Apple in your portfolio, and you kind of just need to hold it. Now, I will say that we've done some trimming, excuse me, some rebalancing in our risk aligned portfolios now, that you may have sold a couple shares of Apple, but for the most part, you still have that big core position. It might, most likely is your number one position in our portfolio here. It certainly is mine and across the book. So when you look at the PE ratio, unlike Amazon at 120, here you have PE currently at 26 for Apple. With for actual, they do pay a little bit of a dividend, so you get something in the mail, proverbial mail, if you will, for holding the stock. So all in all, still love Apple. Still think it's the best company in the world, and you can buy more here because it's likely going to continue higher.
Last, the market is on pace for the best month since 2020. Does this mean that the bottom is officially in the stock market?
Well, I think so. So now you never know for sure. So it's not time to refi money out of the house and jam it into the market with reckless abandon, right? It's just not that kind of environment. We do have a war raging on still. We still have inflation that we think's at peak inflation. We don't know. We'll wait for confirmation on that. We still have rate hikes that'll continue, but we think we're at peak rate hike, if you've heard folks talk about that. But we don't know yet. We won't know till September if they back it down to 50 basis points. So there's a lot to like here, but that doesn't mean the risk has gone away, right? The risk is still there. Certainly, all kinds of crazy things can happen around election time. So, it's not one of those, you can add money here, but it's not the let's go crazy type moment that we had back in March of 2020 when the market just crashed and like the world was ending, right? So we bounced high enough. When you look at the numbers for July, you got the NASDAQ up over 10%. That all has to hold today. But S&P 7.5% and the Dow up by 5%. So certainly in a year that has been completely void of good news, it's been nothing but pain as far as the the investing experience this year. I'll show you the NASDAQ 1-year chart. We're starting to see a glimmer of hope, right? And folks are like, well, how can the market start back higher, in the face of all these things? Well, just like I talked about, if you're past the peak of all those things, then that's when anticipating the anticipation of others means that the market is way in front of what's actually happening in the world, because it's predictive, right? So folks are putting money to work here. I have no problem putting money to work here. And overall, yeah, absolutely. I think the bottom is in the market. And of course, it's nice to have a month where, you're kind of up 10%. So we'll see what happens on today, though.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here Monday.